Just for the record, Baidu has 84% of the search engine market share in China as of September of 2021, so I assume it's probably getting larger.
All right, guys, Baidu, China's largest search engine and technology company. It's huge. Let's look it up in our software. Now, there's a lot of stuff going out there about China because of these whole balloons and things like that. Use this as an opportunity if you feel comfortable buying Chinese companies, which is not for the faint of heart. Don't buy it just because somebody else is buying it. If you remember, we actually believed Alibaba was a value play, but we didn't buy it originally because we thought to ourselves, we're a little concerned about the China thing. And then Charlie Munger, we trusted Charlie Munger when he said, basically we didn't buy it because he bought it. We bought it because he felt comfortable with it, saying, yes, I understand this and I'm comfortable with that. So we were cloning him in that regard. I have no idea what Charlie Munger valued any of these companies at. Go ahead.
They just for the record, Baidu has 84% of the search engine market share in China as of September of 2021, so I assume it's probably getting larger.
So it's like the Google of China, of course.
Exactly.
All right, let's check out some things on Baidu. $51 billion market cap, $66 billion enterprise value. The difference essentially is debt. Free cash flow and 5-year free cash flow are exactly the same, pretty much. That's interesting. Profit margin, very low. 5-year profit margin, decent. Gross profit margin, Google's is better. Revenue of $18 billion. No dividend.
Look at their ROIC.
It's terrible. 4.1%.
Absolutely awful.
Oh, that's interesting. Okay, let's check out their 8 pillars. Oy vey.
Jeez. This is not what I was expecting.
Not what I was expecting at all either. Now, this is very common in Chinese companies. They don't buy back a lot of shares.
Yeah.
I think Baba is one of the few companies reporting they're going to buy back shares. Low price to free cash flow, which I'm glad to see that the price to free cash flow is lower than the PE. It's harder to manipulate this number than it is this number. Interesting. Analyst estimates. All right, now remember, on these analyst estimates in our software, it's in their currency, but that's not the goal here. The goal is to look at the growth rates. Big growth rates here, double-digit growth rate.
Yeah.
Ironically, with revenue, it's still growing.
Right.
Interesting.
It is interesting. It's an interesting one.
Yeah, this is interesting. What's in the news on Baidu?
Let's see.
Chinese companies announce competitors of course, ChatGPT.
Oh, here we go. Alibaba and Baidu want to get into that.
BlackRock is betting big on Baidu. Oh, that sucks. Whenever I see big companies like that betting big on something, I assume that I want to avoid it.
It's up 5.69% today.
Oh, wow. If you remember, for those of you who pay attention to the channel, I used Baba as a tax loss harvest, and my replacement company was Baidu, and it worked out swimmingly. It worked out very, very well. When was the low here? 73. So look at this. The high was right in the middle of the arc high, $355 in February 2021. Oh, the low was October 2022, just 4 or 5 months ago, $74. And it's currently at 144, so it's doubled almost. No, it's doubled exactly. It's exactly doubled, basically, in the last 4 months. Is that reasonable? I don't know. All right. Stock Analyzer tool.
All right, let's see.
Let's go 10 years. Boy, I'm just not feeling that ROIC, though, and some other things.
No, it's not ideal.
Yeah, this is a tough one to do because it is China, so you expect a higher growth rate. Man, this profit margin's poop in the butt.
It's terrible.
Absolutely terrible. See, this is what I don't like. I don't like the lack of consistency. Now, the free cash flow margin is much better in terms of consistency.
Nice PE. 80? 81?
Yeah. And then look at the price of free cash flow.
Jeez.
They must have had some big write-off. So while Mo gets his ready, I did a 20-year analysis. I did 5, 8, and 11. I did 9, 12, and 15 for profit margin. For free cash flow margin, I did 14, 17, and 20. So Mo, what'd you do for revenue growth?
Revenue, I did 4, 7, and 10.
Okay, on your 10-year analysis. What about profit margin?
15, 18, and 21.
Wow.
Yeah.
Free cash flow?
Free cash flow, 16, 18, and 20.
So look how different Mo and I have on the profit margin versus...
I have to think, I look at it going, at some point they can hover around these, stabilize these long-term profits.
Yeah, I bet you're probably more right than I am. All right, PE.
PE 15, 16, and 17.
I did 15, 16 and a half, 18 for both PE and price of free cash flow.
Okay. And my return 10, 12, and 14.
Same with me. So it's $147 right now. Mo, give us your numbers.
Let's see here. So we have 125 to 133 220, 210 down here, and 168 middle ground.
Mine's 87 to 135, a high of 201 to 268, somewhere in the middle, 140 to 193. So it could be a decent deal now.
Yeah.
Why do I have it so low on my watch list? I don't know why I have that there. It must have been for something else.
I don't have it on my watch list. I don't think I'm going to add it.
I don't think so either. I'm actually going to remove it from my watch list. So I'm going to go
pass.
All right, guys, that's where we're at right now. You saw this live and in person. If you like the software, $7 for 7 days. It's a new promo, everythingmoney.com. Go sign up. Thank you very much.